The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 18th day of October. Dow's down 316 at 25,392. Remember yesterday at this time when I had a call from Ben who was looking at the 100, let me go to it right now, 120-minute chart of the Dow, and he wanted to know if this was a good time to short, and I said, well, it could be, but I would much rather, because there's been residual strength, I would much rather wait till after the Fed speak at 2 o'clock Eastern time, because if the Dow was up 135, that would mean that you're going to a leg D, and then you could start looking at a potential short. But if it did pull back 135 points after that, yes, we're making that arch formation called the dreaded H. Actually, let me just draw it in here. Did I just get right here? Okay, so the dreaded H just looks like a lowercase h. And why do I call it the dreaded H? Years ago, back in 2002, I think it was, or 3, it was a pattern that I used to, I was particularly familiar with because I developed techniques based on it. And I was showing people who were along gold in the Tiger's Den. And I said, you know, I've got a pattern that I call the lowercase h. And if the left side is taken out sharply, it could keep going down, and it could keep going down. Let me do this right now. It could keep going down for quite a while. Let me find, this is called the dreaded H, I believe it's chapter 17. Yep, there it is. So this is what it looks like. This is from my CD introducing the Chapman wave methodology. What happens is you come down quite sharply, and then you make a little rally that fails. Usually it fails at a peak A or B. And then it goes to the left side low, and if it takes that low out, it can keep going down sharply. And in a serious bear phase, you can get that happening over and over. The most famous one for me that I can remember was the 0% change going into after the August high of 1987. The market pulled back, and then it bounced. And I'd said to my first big client was Fidelity, and I had a hotline, and I said, if there is an intraday, if there is a move 60 points lower than the close of yesterday, 60 points in those days was a lot of points. I said, expect that you're going to go straight down. And what happened was there was a 0% change, and I used to do a lot of work with 0% changes, meaning that the Dow had closed, and in those days we're talking about 2,300 or something. If it changed within 1%, I called it a 0% change, and I had a whole bunch of techniques to say what happens if it goes up, what happens if it goes down, and it was a 0% change. In fact, I think it was an exact 0% change, and then the market the next day was down 60 points, and then that was it. This is a very serious thing. So I said, watch this arch formation, because it'll form that H pattern. And if it fails and you go down 135 points, be careful, because that would say to me, yes, now it's ready. And then he was wanting to know whether to short. I don't know if Ben did short. I know others did short at that particular point. And now look what's happened. You see that trend line, this little dashed line? It's actually an up channel. So there's always two fighting chart patterns, especially when you're coming off a bottom. One is the arch formation where it says it's going to fail. The other is a Chapman wave falling X. It's the inversion of the falling X pattern on the upside. And in this case, it turns out to be an up channel. Well, we took that out this morning right away, boom. And now we're down 330. But look, the MACD hasn't even crossed negative yet, and the stochastic's only now at 73%. So there's still, as you saw earlier this morning, there was that counter trend bounce. Not serious stuff. Okay, within the context, I didn't want to get there. Let me just see what we've got here. Isn't that interesting? I still don't have. Wow, the Richard Arms Trin Index is still at 1.11. It's barely acknowledging this is not good for the bulls. Okay, let's get back to our story. So we have been short from the day based on the Chapman methodology. There's that doji candle at leg E. Here's another up channel example, great example. It's the exact opposite of the example I'm showing you now. This one couldn't break the up channel resistance, and it pulled back right in that up channel inside track, Chapman wave inside track. The next day in the morning, the first thing in the morning, I said, we're going to short right at the opening. We shorted, it came down. I said the 200 period exponential moving average in the 2,500 area, 25,000 area is going to be our first big target. We want to take a little bit off there. We took a little off at 25,020 and a little bit off at 25,300. This morning, we went back to a lot more heavily short. And now the Dow has this arch formation because that MACD, one of the reasons is that MACD barely budged with that big move up on today's Wednesday, on Monday. And that's not a good sign. And the stochastic rally really didn't rally all that great. So we haven't broken down until the Dow really closes under 24,800, let's call it 24,800. There's still a chance at any point you can get one of those bounces. This is just not good action. Based on the weekly chart, look at this. Weekly chart, that is a peak G. Tomorrow's close should be probably under the 9 period, under the 14 period and the 9 period moving averages. 25,715, I think, is the 14 period moving average. Not a good sign. And that monthly chart, it's a little warning. That monthly chart, this is serious. That's a leg F and a really ugly candle. Going to watch, and the MACD, it's just about to cross negative. It hasn't yet. Still a week or so to go. This is going to be very interesting. And 81.90 is the stochastic in the Dow. All right, let's run the others. S&P, SPX.X. S&P right now is down 37, down 1.3%, same as the Dow. There's your arch formation, made a leg A, and now it's a gray peak A. The 200 period moving average of 27.59. That's going to be absolutely key support. Weekly looks terrible, and then monthly is testing the 9 period moving average and has already hit the 14 period. Ooh, I'm a little nervous, I can tell you that. QQQ, yeah, we go. 1, 2, 3. QQQ, this is the Invesco Trust Series. Gaps down. Talking about a gap down, I'll show you a whopping gap in a moment. 173.81 down 1.97%, down 3.47. And there's a little W formation in the MACD. Stochastics at 38.89, not very good. And the weekly chart is everything's under the 9 and 14 period moving averages, and the uptrend resistance line, support line. It's now resistance line. And I'm watching that monthly chart really closely. Let's go to the IWM. Question about the IWM. IWM is down 1.46, not as bad as the S&P, but it's down 2.30 at 155.66. There's that H pattern, same sort of thing. That weekly chart is in a sell mode, and that monthly chart, I'm not going to jump the gun, but there's almost certainly going to be at least a sell signal in the iShares of the Russell 2000 monthly chart. Wow, you believe that? I'll be right back. Chapman,
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Yes, so IWM, now the big problem with the IWM, as I see it, is that within the context of the monthly chart, this is the only one where you can see that the MACD, the moving average convergence divergence, as we speak, is like at 0.10. It is within just a fraction of crossing negative, but it still has a week to go, a week and a little bit, before the end of the month. No, what am I, is it 2 weeks or 1 week? I can never get this right. Week and a half, whatever it is. It has a little way to go, week and a half. And then we'll see what it does. But the stochastic's still at 87%. That's good. On balance, volume's turned down. Relative strength, look at that gray line right there. Horrible. It looks terrible. It's under 60%. It's about 57%. This is a big move down for the RSI, which just recently was at 79%. So I'm looking at this and I'm saying, this is your heads up. I said it earlier on. There were three aspects that I said made me real nervous about as we came into, I think it was towards the end of September, as I was getting signals that said, something's going on here. Number one was the weekly charts were about to give me sell signals. They hadn't yet, but they were about to give me sell signals. And I said, that makes me, because of the lecturing in the Chapman Wave methodology, in the Dow, let's go to this one first. The Dow in the monthly chart is leg F. And it has the look. Oh man, do I have to bring this up? I do, because if I'm talking about it, I'll bring it up. You remember this chart right here, if I can find it? Uh-oh, did I just mess things up? Is this it? I hope it is. Yeah, remember I brought this chart up and I said, what a coincidence. I was going to send this out for my subscribers about 4 weeks ago, I think it was, on the Saturday. And for some reason, I just couldn't finish it in time to do it as completely as I wanted. So I kept it. And then Monday, I was busy here, at my 6 monitors and all, busy doing all my stuff. And I look up and I see this black background chart and a long trend line. And I thought, wait a minute, did I send out the chart? Did I just get, did I? And then I look and I see, well, it's Steve's show and Steve's discussing it. And I was really busy. I wasn't able even to listen, but I saw the chart and I thought, what a coincidence. Out of all the charts that we have, the very chart that I spent hours and hours from the Thursday before right up until that day. In fact, I was working on the chart when I saw it. I couldn't understand how it got on live. Steve was discussing it, and he told me afterwards he was talking about it in terms of a trend line that was cutting through a little lower down from the trend line I used, and he was talking about it in a particular way. So I'm looking at this. My way was that there was a Chapman wave inside track going back from the 1997 low at 1336, what was it, 1661, and to me, I've always done this. It went right to the top of all the tops in 2000. And then you just forget about it. And I was discussing it in terms of having hand chart. I've got a hand chart right over here, where I used to have to stick the pages together to be able to get them as they grew from 1929 when I went back to hand chart, all those things that you get in the book with the Dow closing prices, etc. And I would find that a trend line that I drew with this 36-inch ruler, suddenly the price was coming to it and I'd completely forgotten about the trend line. And that said to me, never, ever forget an angle of ascent or descent because it's going to come back at some point. So when I'm looking at this, black background chart, and it goes back from the 1987 crash low, the light blue cyan dashed line, it said, there are so many peak E's and F's that turned out, or F's and G's with that V-shaped pattern. Look at the 2007 peak E. Remember in the summer, then October, that weekly chart said, no, it needs to go to that camel hump second high, and it went there. And at 14,192, turns around, there's an E to F. And then again, D to E, same V-shaped pattern back in 2000. That was 2000. This is 2007. And now we're doing the same thing. And I said, this red line, this trend line is going to be really important, and that we're probably going to break it, but I'm just watching it in the meantime. Well, we've gone under it now. Now I'm going to be a little more conservative. You see the little tiny green stems right there, little candle wicks? I'm going to say, you know what? Because there are so many, I'm going to move the line to make it as conforming as possible to the 3, 4, 5, 6 low points, and that's going to give me even more security to say I know exactly what it needs to go through. That's why I'm saying a close in the Dow underneath 24,800. That's kind of a heads up. Now that I've moved the line, that particular line for October says you can go all the way to 24,584. So there's a little leeway, but that's the reason why I've gotten, that was number one. Number two is, look at all these charts. Look, Syntax. I developed this index called CASH, C-A-S-H. Am I seeing your IMs? Oh, I do see your IM, yes. Let's go to Paul in Henderson, Nevada. Nevada, I love saying Nevada. Hi, Paul, how are you? Is Paul there? Oops.
Hello, Basil, are you there?
Yes, I am. Hi, Paul.
Oh,
how are you doing?
Great. Hey, I'm doing pretty good. How about yourself?
Very good. Thank you.
Awesome. Hey, so Basil, I had a question about your dreaded H pattern.
Yes.
I'm looking at the Dow on the daily.
Yes.
And I'm curious on when you're looking at this dreaded H potential setup here. The Dow came right into the 9 EMA and just started giving it up.
Yes.
Where would you set up your short position? Would you set it up at the 9, or would you set it up at the break of the low there, the left side low?
So, okay. So now let's go through this, because remember, we're looking at this in real time. What I would say to you, if there is another, and you know, the way the market is moving, there's just, yesterday it was Goldman Sachs that alleviated that tremendous selling pressure in Home Depot and, what was it? Home Depot and something with smashing to the downside. Good grief, why am I forgetting it? Anyway, there were two stocks that were sharply down, and Goldman and Johnson & Johnson helped them down move higher. So this is what I would say to you. Now that you've already got a pullback from yesterday's let me just open this up a little bit to make it bigger and people can see it better. I'm going to move it over. This is now the daily and a much bigger chart formation. There it is. Now you can see it. So that pink line, which changed from green to pink on the way down, that pink line is the 9-period exponential moving average, and that is at 25,712. And the black line is the 14-period at 25,851. If there was a rally today and it went right back to the 25,711 area, the 9-period moving average, I would not be wanting to put a short in at that point. I would say, you know what? That is really good counter-trend strength. I think it's going to actually try for the 14-period moving average. So I just wanted to talk to you about the context of how I look at the H pattern, because you've got to be able to see where it will break down. Hold on, and I'll be right back. We'll be back with Paul in Henderson, Nevada.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back, and I'm going to ask, Paul, are you able to see my charts live?
Yes.
Okay. So I wanted to show you a really good, this is a live example as we're looking at it. Wow, I got a feeling this is one of the first times in literally ages and ages and ages. Some people might not even know about this, but some of us know it very well. Do you remember when there was very heavy volume, how we used to always have very slow quotes? There'd be a kind of a backlog and you wouldn't get the quotes live. I was very lucky back in when was the flash crash? whenever the flash crash was. I just begun a particular a new software package, and I was using theirs for futures trading, and they had absolutely instantaneous quotes, and the quotes from Bloomberg and everyone else, TradeStation, were delayed. Bloomberg was like 20 minutes late or something. I think we just had that a moment ago. Well, I wanted to show you the H pattern right here in the 2-minute chart of the E-mini. There's a pattern where it came down very sharply, and then it held at about 25. What was the low there? 25.68 round number. And it starts a little rally, and it goes up, and then it fails. As it's failing, you'll see that the MACD started to rally. The stochastic was rallying, and that said that the lowercase h, I'm trying to change the color here. Can I do that? Yeah. Why am I not being able to change the color? I think there's just a lot going on right now. Maybe there's a lot just in this particular desktop right now. I can't change the pattern. So what I'm looking at is that every once in a while, the lowercase h, as the right arch formation low is coming in to test the left side. That's the most key point in this case, is the 2760 level. It comes down and it goes a fraction above it, and all of a sudden there's a rally. Well, that rally, because the MACD and stochastic were in fact way better this time, said that it could rally. And where could it rally to? And in fact, for anybody in the den, you would have seen me drawing this whole pattern before the show, before I came on. I was drawing it because that's what I do all day. I busy do these patterns, and I try to trade off the pattern. And the rule of thumb in the Chapman methodology is in the H pattern, if the right low is higher than the left side, as the technicals are rallying, there could be a rally, and that rally should take the price to above the arch high. In this case, that would be the high right there of 2777.50. And the next level would be the left side, a left side peak of importance. Well, in this particular case, I chose the bar of importance, which is 2783 at 11:46 this morning. But in fact, it could even rally to the arch, which is really at 2785. So that's, I just wanted to show in live, this is exactly what we're looking at. And that's the reason why I said to you that in the arch formation, now let me go back to this, get rid of my big chart here. Oh, and just for the record, I just wanted to say this, the chart with the big black background, monthly major long-term trend line with that cyan. I was just really concerned that there would be an inside track repellent at the 26,951 level, alternate count F/B, and that could turn into a peak F, and it could be a deeper decline, and that's really what I've been very worried about. Now I'm going to go to your question, and I go once again to the live charts. So now what we're looking at is this trend line support in the chart on the left, where I have no MACD and stochastic, it's just other techniques, where we pierced yesterday at the close and then at the open today. Now that resistance is at about 25,513, so it's about 80 points up from here. Most importantly, what we did I say that correctly? 25. Let me just get that right, because it's this bar right here. 25,569. I knew I was wrong. That's going to be very important. Now, what I wanted to say to you is that if you look at the right chart on the same page, the one that has the MACD stochastic, you'll see that it's gone under the 9-period moving average and the 14-period moving average, yet the MACD is holding pretty darn well. So on the one case, it'll be positive if this market suddenly has another bounce like it's already had once today. I just don't think it's going to have anything close as that. It could have a bounce, but nothing like that before. But if it did, what I'd be looking for, and I'd say is, ooh, that's starting to rally back without forming a real arch formation. It just started the arch. It really needs to break under the low today. The low so far of 25,314 really needs to get to 25,280 or lower. And then I'd say, you know what? I don't see how it's going to avoid that arch formation coming back even deeper. So that's why I'm saying to you, the perfect opportunity was when Ben called me yesterday at this time, and the Dow was hovering. It was under the 25,817 level. It was a decision whether at 2 o'clock it was going to pop over 25,820 to make that leg D or fail. So that was, at that point, probably a perfect time. But I see to him, hold off. You just want to wait, because give away a few points rather than to be wrong and then suddenly go short, and now the Dow's up 135. That's not good. So I'm saying
Basil,
to you,
I got another question for you. Why what is it about the 9 why does it work so well? Is there a reason for it, or is it just what it is? Because I noticed, especially on the 15-minute chart, during my day trading, the 9 is such a key level of support, and I use other techniques that I've learned from you and some of the other traders and some of the other stuff that I've learned, but that 9 just seems to work very well all the time. Is there a reason for that you know of, or it just is what it is?
I have an empirical reason, a very practical empirical reason, but it's really someone like Dave White who does the study, he does the mathematical study. He could probably give you a much greater reason, I mean, on a purely mathematical basis. I'll tell you what my reason is. Over the years, and let me just grab any old charts. Let's just grab, yeah, look, I've got the Dow Daily. The green line right here, and I'm going to highlight the green line. That green line was the support on the Dow, and I found over the years that I put the two together and I tested them, and I found that the simple moving average, the 9 period, just didn't give me the support on the pullbacks. You know, I like to say walking the 9 period moving average, and it really does that. I mean, aren't you shocked always how it just suddenly comes down and then it holds the 9 period moving average and it bounces off that? So on that basis, I know why I like it. It uses the last close as one of the major criteria. And I think because of that, because of the look back period plus the last close, it's giving you for me, it's giving me a chart formation that is really based on the mathematical formula that says this is where the support should be. And it turns out that's usually where it is. If you want, we can continue, because it's really important. A lot of people
certainly. I would like questions.
All right, we'll be back. Folks, the Dow is down 272. We'll be right back with Paul in Nevada talking about the 9 period moving average.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So Paul, the reason why I wanted to make a big deal about that particular pattern, the H pattern, and what happens if it doesn't hit the left side, that whole thing that I was showing you a moment ago in the 2-minute E-minute chart, where I said there should be a parallel move, left side, right side, price time move towards the 27.85 level. We just hit 27.85, and you can see how beautifully this bowl formation formed. So that's the reason why I said, in terms of a new short on that, now it's more difficult. So now let's go back to what we were talking about, the 9-period moving average. If you're looking at my daily chart of the Dow, you will see that Monday, today is Thursday, Wednesday, Friday. So Tuesday, that huge move to the upside stopped. You can see it. I'm going to make this even bigger. It stopped exactly right on the 9-period exponential moving average. Then it pulled back at the open yesterday, and then there was another sharp rally before there was a failure, and then a rally attempt with a doji candle, long-legged doji. And where was the start? Where was the resistance? Just a fraction above the pink line. Today, it tried to run up, and where did it stop? Just under that pink line, and that's the 9-period moving average. So all I can say is that over the years, when I say empiric, I mean that it's been real life performance rather than for me to do a mathematical study. I'm just saying that's what I've used. I like it. It's the best of all. That's what I find just really works for me. And all I can say is I love it. All I can do is I say I've added the 14-period moving average. I've had it for quite a long time, but I've used it in a different way for the last, I'd say, 6 to 8 months. And it really has been helpful, and that's the black line. And that black line for the Dow is at 25,853. Any rally that goes above that in the next week would be really impressive. But at this particular point, it's the 9-period moving average. So in a sense, I hope I've given you a kind of a little bit of a lesson, which I usually do Friday, but today's Thursday. I hope that helps you because I like to explain it, because it also enlightens for me some of the aspects that I've taken for granted, and it's just great to get a refresher.
No, it definitely did. And while we were talking, I took a trade in the TVIX, and as soon as it went right to the 9, almost exactly, it was a quick scalp trade, so I'm already in and out. And it just works beautifully all the time. And the SPY got right up to the 9 on the 15-minute, and it's having some trouble. And I was just curious why it works so well, because I see it just over and over and over. So I really appreciate you taking the time today, Basil.
So just to give a quick review, the reason why I believe, and I would love if maybe I'll ask David if he can do a little bit more work on, I know he uses an oscillator based on a 9-period moving, but just something a little different. So I use the exponential. I just want to make absolutely sure it's the exponential one that for me is the very best. And the other thing is that I do believe it's because of the close, the last close is where it is really, the formulation kicks in. I think that's a big part of it. So I hope that helps you.
Yes, it does. Thank you so much, Basil. Have a great day.
You too. Thank you so much for calling. Good question, and I hope I gave a good answer. Now, a couple of things that we wanted to look at here. I was in the middle of things. We've got Dan in Alpharetta, Georgia. Hi, Dan. How are you?
Hey, Basil. Doing well. How are you?
I'm good. Thank you.
Very good. Hey, I'd like to get your input on the small caps, and I was short this, and I got out Monday morning, and I expected a bounce, and I was thinking it might get up into the 160s, low 160s, and I know your wave count, it only looks to be in leg, possibly
on the way up,
C.
on the way up, it's a gray leg A on the daily of the IWM. On the daily down, it's actually in a recycled. If you know anything about my Chapman wave instant restart, there was a D and then it went to an E on the way down the 24th of September. This is the daily chart at 168.76. Tries to bounce and then it failed. And then there's an alternate count F/B, G/C, and then you can never go to an H. Then it goes to a D. D is where we're at. The MACD, the moving average convergence divergence, is the histogram's improving a little bit, but it's really struggling to get off the ground. The stochastic did rally and the price did rally. And what did it do? It went right to the 9-period exponential moving average. So you got out Monday, just in time, right?
Yes, sir.
Very good. What was the reason for you getting out?
Larry Pesavento relayed a story of how one of his trading buddies, whenever they would go look at their profits and try to go to their calculator, it's time to sell. So,
I love that. I didn't hear that. I have this thing, and I make this joke about it. As soon as you're about to buy the Maserati, get out of the market. It's just, I know it from my own experience. I had exactly the same thing happen to me. I think it was last week, or maybe it was Monday. It's just such a busy time. I don't remember. I had, against all conditions, and I was trading the exact opposite of what the market was doing, and yet I did in the futures, and I did really well. And I'm saying to myself, that was, pat, took my hands off the wheel to pat myself on the back. And as I did that, I said, oh my God, that's a problem. That is a real problem. And lo and behold, the next couple of trades, boom, boom, never take your hands off the wheel to pat yourself on the back, because that's when you hit the tree. I got smacked on the nose. And even though I was talking it out and saying, no, don't, just take a break. Don't do anything for 3 days. There was just this instinct to say, yeah, it happens, and fantastic. So you got your profits, and now you're wanting to say, what should I do? So this is what we're looking at. The 9-period moving average in the IWM daily went right to the, on the 16th, went to 158.86, and the pink line, the 9-period moving average, was resistance, because the next day it gapped down, tried to rally, couldn't get above that pink line, and today it went just under the pink line, and now that pink line is 157.86. So when I'm doing this, and now you've had a really good trade, and you want to know how can you get into a new trade, and is your idea, in your mind, do you have a particular bias right now? Are you saying, I want to go short or I want to go long? What are you thinking? Not what are you going to do? What is your thinking? That's very important.
I think if it got up to 160, if the small caps got up to 160, I might make a small trade, but it does. I think with the elections coming up, I probably going to bounce around here a bit until after the elections.
So when you say make a trade, are you saying make a trade to the downside?
If it gets up to maybe 160 to 161, I would go short. If it got back, and just see and put a stop in there.
Okay. So here's my thinking. I'm going to suggest to you two things. One is you've done very well. There's the bell, so we've got a break. Can you hold through the break?
Yes, sir.
Okay. I'm going to come back and I'm going to ask you two questions. Let's see what your answer is. I'll be right back. We're going to be back with Dan straight after this break. We're looking at the IWM down 2. And as we do that, I just wanted to say that gold came back from being down earlier on. It is up 4, and the dollar is held really well.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. Before I forget, don't forget, you got Steve, you've got Dave White, you got Tom O'Brien back again this afternoon, and Tom is doing should be a fantastic workshop at 5 o'clock. Please, this is a great opportunity to go through gold from 2000 to the present day. Just a really great analysis, I'm sure, coming up today. So, Dan, what I'm going to say here, I have two questions. First question is, if the IWM at 155 continues to go down and suddenly it's at 154, what would you do? That's question number one. And number two is, if it actually breaks above the high of Tuesday, 158.87 starts a new leg up, then I would actually have the patience to wait for the 14-period moving average round about 159. So my question really is, one big question is, what would you do if it keeps going down? Would you jump on, or would you just say, okay, I've missed it? How would you deal with that?
If it closed below 153, I think I'd take a small position, a short.
Okay. So I just wanted to ask you that because we covered the one way, and I knew that somehow or other you would have another plan. So I'm going to do this. I've got a couple of quick things to do now. So I'm going to say, are you able to call tomorrow?
Sure.
Let's talk about it tomorrow, because you've posed some really great questions. I'd like to deal with it with comfortability instead of rushing. So is that okay? I hope to hear from you tomorrow or even Monday tomorrow. Good. Thank you. So we'll be back with Dan tomorrow. But I want you to do this real quickly. Thank you very much. I just wanted to say, you've got Tom's webinar coming up. I also wanted to talk to you about a whole bunch of questions came in. Yes, it's really important. I wanted to finish the other point I wanted to make is my cash index, CASH. Cintas, overalls, uniform. The Fed should just use my cash index. Surely they would know that there's a big pullback coming in. These major companies, and that's an issue. Cintas, you've got Home Depot clobbered yesterday and down again, huge today. This is, hey, SWK, you've got Stanley Black & Decker. I think you have Stanley Black & Decker, 176 to 120 in this year. Hey, Fed, wake up. Things are going on here you're not aware of. Hey, that's enough for me. I'll be back tomorrow. Stay tuned for Steve, and I'll be back tomorrow. Check out my opening call. Hope you'll find it.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.